Good morning, my good leaders. It is a wonderful Saturday morning, and in our endeavor to bring new content in this world as pertaining sacco pertinent issues, you all know that this week we are talking about sacco records and sacco bookkeeping. And even as we talk about sacco records and we talk about what the Act, Chapter Section 2025 of the Cooperative Societies Act and its provisions, and also the Cooperative Societies rules as pertaining sacco records and sacco record keeping. These rules are just there to safeguard the welfare of the sacco and its members. So the sacco should endeavor to exceed the thresholds that are provided in the Act. So as far as sacco record keepings are concerned, records of the sacco are kept for administrative purpose and also for financial purposes. So we'll dwell much on the financial aspect of record keeping of the sacco. As far as sacco financial records are concerned, it is important to know that the records that are kept, financial records that are kept by the sacco should be first and foremost for the purposes of the consumptions of the management of the sacco and the members. And the second should be to meet the legal requirements as provided in the Act and the rules. So the main purpose of record keeping is so that to supply the management information for decision making and also to update members on their records. So records of the sacco are divided into two. First of all, we have records for members' consumption, and also the second, records for management committee consumption. So the records for the members' consumption, members are usually first and foremost very much concerned about their savings and loans. A member would want to know how much they have saved, and that information should be complete and current. Current in the sense that the members should be up to date until the last month. The members' member statements should be up to date until the last month. So, for example, now we are in May. A member should be able to access their records up to April, end of April. So the share contributions both from the payroll and from the cash and from any adjustments that have been made, that ought to have been made affecting the member savings should be up to April. Also, the members' transactions as pertaining the loans advances, loans repayments, and all the offsets that are affecting the loan balance should be current. And current by current means up to April, 30th April. I am talking for the sake of SACCOs who don't have software. But for SACCOs that has software, the transactions should be real-time recording, which means that whenever a transaction which is affecting the members' personal accounts have been transacted, it has to be reflected in the member statements as and when it happens. So those are the information that also members are very much concerned with. Another record keeping that also members are also concerned with, but maybe at a later date, is when the financial statements have been audited and they are supposed to be circulated in the AGM. Members are also concerned with that record then the records that management are concerned with are first, you remember that sacco societies, a sacco is a public organization, and there are laws that are requiring to be in place to fast track its expenditures. Like a sacco will not incur any expense unless it is approved by the members in the budget, pre-approved. Pre-approved means that, for example, budget expenses that are incurred, for example, in the year 2022 must have been proposed and approved by the by the members by the end by the end of 3 months 3 months before the end of this year. But before it has to be approved 3 months before the end of the year 2021, so that when the year 2022 comes, the management have a budget to work on. So it is important. That one is very much important. And the records, therefore, will be now the actuals. The actuals of this of the financial of the records will occur when now the year rolls by. The management will be having the permission to use that budget. So the financial records that the management will be interested in are the accounts, books, and records of the financial statements, and the management will be interested in trial balance, bank reconciliation statements. The management will be concerned with income and expenditure account and the balance sheet. So basically, the income and expenditure account, which is called statement of comprehensive income, is the management are going to compare the actuals against the budgets. So how much has the management fetched in regards to income, and how much has the management spent in respect to expenses. So this one will be guiding the management whether they are earning less than budgeted, or they are spending more than the budgets. So this is called the budgetary controls. So if the moment the financial statements have been given, the management has also to compare with the proposed budget so that they can be able to gauge their performance. It is important to note at this point that the budgets are also tools for management, because even at the budgeting level, an expert should be engaged so that it is realistic. The budgets are realistic, because you can think that the society is performing well. Kumbe, it is only the proposed budget was below the society's potential. So it is important that these figures are fixed with the help of the expert, so that we be able to be as realistic as possible. So who prepares the financial statements of the sacco? The Act says that the management should prepare the financial statement of the sacco. And that one does not mean that now the treasurer or the chairman or other members of the board are the ones to actually prepare the financial statements and the records. The records are usually prepared by help of an expert, bookkeeper or an accountant, who has done his work, and he knows very well the benchmarks that are required for financial reports. And then, while the management committee can delegate this piece of work on records of the books, the management remain responsible and accountable for the work that. So the bookkeeper or the accountant reports to the management committee. So to an outsider or the member, it is the management committee that prepares the book. That's why you see the act says the management to prepare the books. So, but not literally preparation of the books. And again, it is not recommendable for example, now the treasurer or members of the management committee to prepare these books. One is because this the board are already working. They are already working. They are already working elsewhere. So there's no need to put them under pressure because they don't have the time to do this work. They will not dedicate enough time to do the work. Another thing also, the management might not have the expertise and the expertise and the experience required to prepare the books. Preparation of the books is a technical and a professional aspect, so it might not, the management might not have the right skills. And then another reason also is a conflict of interest. We need an outsider who is independent to prepare these books. So we vote for the management outsourcing for a qualified accountant to do the books, who will be responsible for doing the books. In any case, that one, if the management, the sacco can employ, or outsource. So the benefits of outsourcing are immense because you find that is where you get qualified personnel at a relatively lower cost, reasonable, competitive cost. So we are recommending that the sacco, if they are not able to employ a qualified accountant, they can be able to outsource. And accounting firms that are doing bookkeeping for SACCOs are so many. And again, another thing that you must also know as a leader at this point is that being an accountant is not enough for you to know how to record SACCO books. There must be some collateral experiences that is required that accountant has gained. So whenever you are looking for an accountant, do not just consider because somebody is an accountant, he also has qualified for CPA, has done even the courses of cooperatives at cooperative college, has done commercial or as a degree, and you think that this person can do the books. It is not always true. So you need to check the background, where this person has worked, where the person is working, and if it is an outsourced firm, you get references from current clients on jobs that the current bookkeeper is, the prospective bookkeeper or the accountant is doing. It is very much important to employ a qualified accountant, a qualified and experienced accountant, because he is the one who is going to advise also the management on the way forward. The bookkeeper or the accountant, the SACCO accountant, doubles as in the case of where a SACCO does not have employees. The SACCO accountant doubles also as the advisor of the company, of the SACCO. Now, which are the records that are usually kept by the society for financial records? So first, we have the source documents. We have the source documents, we have books of accounts, we have the ledgers, we have the trial balance, and we have the financial statements. So when we start with the records, source document, what are the source documents? The source documents are those documents that support financial transactions. The source documents, and I repeat, because this is where the SACCOs are not performing well, the source documents are those documents that support a financial transaction. So these source documents must be there, filed by the accountant and filed by the treasurer of the SACCOs before and to evidence transactions that took place. So in the sacco, we normally have money coming in and money going out. The money coming in should be evidenced and supported by a receipt. Whenever a member has banked money, he or she should bring the banking slip and give it to the treasurer, and the treasurer will receipt that money, and the receipts are normally in 3 copies, so, and carbonated, so that a copy should remain in the book, another copy is for the accounts, and another copy goes to the member. And inside the receipt, there should be written details. Details should be the member and the member number, the payroll number if were necessary, and then the amount and what the member is paying for. The amount and what the member is paying for. Because the member could be doing a share boosting, savings boosting, share boosting, deposit boosting. A member could be repaying a loan. A member could be repaying loan interest. A member could be paying for penalties and other charges, or penalties and fines, or loan form, so whatever. So at that point, when the member brings the banking slip, it will be recorded there, and that one will be a permanent record. So when the accountant now comes in, he will just, and the date when also indicated in the receipt is the date of the transaction in the bank statement. So whenever the accountant finds a banking in the bank statement, he can compare the receipts and then post accordingly. I think the main problem that SACCOs normally have is that they don't have this one, and even you will just find a banking in the bank statement, and the treasurer does not know. Neither the person who is closer to the SACCO does not know, and the bookkeeper cannot know. So that one results into mispostings and differences in the books. So to evidence payment, there should be a banking slip, then the member is issued with a receipt, which is normally called cash received voucher book, and in triplicates, where one copy remains in the book with the book, another one goes to the accountant, and another one is given to the member, the original. You see, in that case, the document cannot get lost. Then, when it comes to payment here, this one is an area which is not being done well. So the payment is evidenced by the payment voucher book, cash payment voucher book. So the cash payment voucher book will evidence the member's name, payroll number, membership number, the reason why the member is being paid. It could be loan disbursement, it could be loan refund, it could be interest refund, it could be deposit refund, and it could be payment of expenses. So it is important to note that whenever you want to combine several payments, it becomes difficult to issue payment vouchers. So as much as possible, try not to combine payments in one check. Try as much as possible to combine payments in one check, because combination of payments in one check brings confusion, and it is very difficult to really itemize and charge this payment to a particular member. So again, the payment voucher book should come in triplicates, where the original is given to the payee of the check, and then the first triplicate is given to the accountant, and the third triplicate is given to is left with the book, so that it keeps in the society, so that these documents cannot get lost. So those are the accounting documents that are required, that were to evidence cash received and also cash payments. Now, those are the documents. Then we have the bank statements that will confirm that, because again, also you see, it's the bank statement that is going to confirm that the payment was actually made, and it is the bank statement that is going to confirm that the payment was actually received. So the bank statement is very much important. Another document that you require to support, other than the cash received voucher books, cash payment voucher books, and the bank statement, are receipts from third parties. Whenever a company, where the sacco makes a payment to third parties, there should be a receipt or invoice to support those payments. And also the payment and we have payments of expenses should also be supported. Whenever you pay a bookkeeper, there should be an invoice. And then when you are paying for sitting allowance must be evidenced by signing by the committee members. And then also there should be minutes that supports that the members attended that meeting. Sitting allowance should not be given in anticipation. It is given when a member attends a management meeting or any other meeting. So there should be minutes to support that the member was in attendance, and all these expenses must be supported, must not go beyond the approved budget. Then we go to the books of accounts. We have two financial books of accounts. We have the cash book and we have the journal. So what is the cash book? A cash book is a book of account where all cash transactions are recorded. So by cash transaction, I mean cash including bank. Cash including bank. So we have the cash book side, which is the debit side, which records the money coming in, and the credit side records on the money coming out. Almost 98% of the transactions take place through the cash book. So after all the cash transactions are recorded, we do what is called bank reconciliation. Bank reconciliation, you realize that even before we go to the bank reconciliation, let us go to the cash journal. The journal is where non-cash transactions are recorded. Any transactions that you want to go to put to the ledger, yet it has not passed through the cash book, is taken to the journal. So the journal will bring in transactions which have not passed through the cash book. Like for example now, salaries. You know, when you want to pay salaries, perhaps you are paying salaries for the month of January, and this salary was not paid by end of January. It was paid by February 5th, and they want to charge it to February TB. So you will have to pass a journal for you to bring that entry, that expense to January, because January has passed and it has not been paid. And also to correct errors. So a journal should be really be scrutinized. It's a tool where accountants normally use to do mispostings for fraudulent or honest purposes. It should really be scrutinized. The journal should be prepared, signed by the person who has prepared, the author, and it has to be approved by approving officer before it is posted. So from the books, we go to the ledgers. Ledgers is where each accounts is arranged so that we see the debits and the credit and the balances. And the balances are extracts from the ledgers are taken to the trial balance. So the trial balance is, as its name suggests, is a tool where the accountants take the ledger balances and so to prove whether it is balancing or not. Because you see this, all these books and the journal entries responds to what is called double entry concept. So if you take it to the trial balance, you will be finding the debit side and the credit side, which should balance. But again, after balancing, it does not mean that all the postings have been made. We have to do another test called bank reconciliation statement to ascertain that really we posted everything. The bank reconciliation is just reconciling the ledger figure of cash book and the bank statement balance. So for the accountant to test whether all the entries that appear in the bank statements have been posted in the cash book ledger. So that is a test that also needs to be done. So after that one, then the accountant will do the financial statements. So the financial statements are: one, income statement, what we call statement of comprehensive income, and then we have the balance sheet, and then we have the statements of shareholders equity or movements of shareholders, statement of shareholders funds. Then we have cash flows, and then we have all the notes. So we start with the income statement. So the income statement is that financial component of financial statements where all the income and expenses are recorded. So to be able to know whether the society is running at a loss or profit, this statement is drawn so that to be able to compare the notes. So whether the society, the sacco, is running at a profit or a loss. So this is the statement where the society, the accountant with the society, with the help of the accountant, will assist the management to prepare what is called budgetary control, so that to be able to know whether the income fetched is, how does it relate with the proposed income, and the expenses incurred, how do they relate with the proposed expenses. Then from there, they will prepare what is called the balance sheet. The balance sheet is basically a statement where all the sacco assets are analyzed, and also the liabilities are also analyzed, and the equity. It is important for the sacco to analyze that one, because the sacco will be able to see the progress, compare itself with the total assets. What is the total assets of last year compared with this year, and what is compared with the target total assets. And then when it comes to sources of finances like equity and liabilities, where does the society get its money, the sacco gets its money to finance the assets? Does it get from its members, or has it borrowed from outside? And if it has borrowed from outside, why does it borrow from outside? And if it has not borrowed, what is the society's financial goal? Does it want to deal more with debt, or does it want to deal more with equity? So those are the finances. The balance sheet will be able to gauge to gauge that one, and be able to answer those questions that has been asked. Then we have the statement of shareholders equity. Here, it comprises usually the reserves and the share capital of the society. So there will be a running columns for share capital, share column for retained earnings, column for statutory reserve fund, and another column for any other reserves that the society has has been accumulating. So it will show the opening balance, the additions, and the subtractions, if any. And that is where also dividend is declared by reducing the retained earnings, and honoraria is also declared, posted there to reduce this retained earnings. Then another statement is called the cash flow statement. This statement is very important because it usually, the cash flow statement is divided into three. So we have cash flow from operating activities, we have cash flow from financing activities, we have cash flow from investing activities. So, okay, your sacco is good, is viable in terms of cash flow, but where does the money come from? The money, ideally, the money should come from operating activity. And if the cash flow from operating activity is nil, is negative, then society is getting money from elsewhere, which is financing and investing, and it is doing little or no business at all, while the society should be doing business. So this statement will go inside to analyze where the sources of income are, sources of money are coming from, and it should be ideally coming from operating activity. Then we have notes that support the accounts and significant assumptions. Usually the notes are just the breakdowns of the accounts that are supposed to support the financial statements. So up to there, my dear leaders, mine is not to exhaust everything, but just to introduce, so that at least we make changes and we make some strides as far as sacco pertinent issues are concerned. For now, I'm very much elated by the responses that I'm seeing in the wall. We have able and seasoned consultants who are making a lot of contributions, and I would like to remind us that here, this one is a leaders forum, and we only have leaders and seasoned consultants here. So when we say that this one is a sacco movement group, we mean that, and we don't want to tolerate some information, irrelevant information, which have been forwarded from other media that is going to distract us. We have seen that there have been postings